You were listening to chartingwealth.com for Tuesday, the 3rd of November 2015. The market continues to move up ever since it crossed over on October the 5th. It has moved up, 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 and again, not surprising as we go into the fall-winter trading zone, particularly in a pre-election year, as we talked about yesterday on our weekly review and forecast. I always encourage everyone who listens to the program to go and read Yale and Jeff Hirsch's Stock Market Almanac. You need to buy that every year. Use it as your stock trading Bible. It is full of just great historically based advice. I love it. The days that I don't read it, I regret it. It's worth reading, studying every single day, and just committing to memory the way that the market really works based upon history, upon cycles that continue to show themselves again and again and again. Even when you say, well, the market can't keep going up, there's no reason for it to go up, there's no legs on the market, look at what it's done in the past. There are big things happening many times that we can't perceive unless we look at history. What do we talk about? We say, as Confucius did, if you want to be able to tell the future, study the past. We do that with our charts every day, and also wonderful references like the Stock Trader's Almanac. Get a copy every single year. I'm sure they've already come out with a 2016. If you don't have it, get it, use it. Go buy yourself a copy of the 2015. So we see the market still well above our 2-day trend line. We have the derivative oscillator gained a little energy today. On our charts, it's a light green box that is behind our derivative. The derivative oscillator is behind our MACD and our exponential moving average signal line. We continue to see the blue MACD and the red signal line stay apart as the market continues to move up. If we drop back, and again, for those of you just joining us, IYY is the total market. It is the U.S. Dow Jones Total Market Index Fund. It's put out by iShares. We like to look at it every single day. Look at the 2-day chart first. Then we look at the 4-hour chart that tells us what went on intraday. It's the half-day chart. We saw in the mornings a little bit of a move up, a lot of a move up in the afternoon. The derivative oscillator lost a lot of speed, didn't quite switch over. The MACD did switch over, did cross the signal line going up, still well above the 2-day trend line. So, the market continues to move up. The longer free money hangs out, the more likely the market will just keep moving up no matter what the news is, no matter how bad it might be. Now, let's go back and take a look at SPY. What is that? Well, that's the Standard & Poor's 500. It's an exchange-traded fund that tracks those big volume stocks that make up so much of the market. It looks very similar to IYY, as it does most days because it's such a large part of the volume of the total market. We see that the MACD continues to move up, derivative oscillators holding its own, and the market has been moving up since the 5th of October, continues to do so well above the 2-day trend line. Got a nice 2-day trend line there. The better the 2-day trend line is, the better it is to see when it loses its momentum. When we look at the 4-hour chart, we can see that the Standard & Poor's 500 surged up in the afternoon, as did the total market. Not quite crossed over yet on the small MACD. The derivative oscillator did flip over in the afternoon, so we continue to have a market that is moving up. Now, let's go back to our 2-day chart and switch over to our last of our indexes before we get to gold. That is the QQQ. What is the Qs or the cubes? That is, of course, the NASDAQ 100 technology stocks, and they continue to move up also. They've had a lot cleaner move up, only 1 day of some down movement, well, 2-day candle of some down movement on the 21st. See, the derivative oscillator continues to move up like stair steps, even accelerated today, and the MACD and signal line continue to stay far apart. Our movement's well above the 2-day trend line. If we revert back to our 4-hour chart, what do we see? We see again that same movement up in the afternoon. We're still actually in the negative on the derivative oscillator, And we are on the MACD also. It's still negative, so it's interesting to watch the market move higher and the MACD not cross over. That tells you something. And we see the derivative oscillator has gotten even bigger. So something to pay a good bit of attention to as far as the Qs go. However, the Qs are still in a confirmed up move, but just pay attention to this short-term movement. Whenever you see movement on the derivative oscillator and the MACD that's not reflected in the price chart, that's showing you that we've got some interesting things going on. Our candles are still telling us we've got upward movement, but our indicators are not. Whenever we see divergences there, that just makes you pause a little bit, focus, and pay attention. Again, still confirmed up moves. As far as the markets go, we've of course got the total market up 1.18% for the day. Same with the S&P 500 and the Qs, the cubes, the NASDAQ 100 up 1.13%. Good up days for the market starting this week on Monday. Now, lastly, let's go to gold. Gold has continued to moved down mightily over the last 2-day candle. We've tried to draw a trend line, but with that much down movement over the last 2-day candle, and that's, for those of you listening by audio, a lot of movement in a big down candle over the last 2 days. Derivative oscillator moving down, MACD crossed over going down at about the same time. But what do we really pay attention to? We really like our half-day or 4-hour chart, and we see that it crossed over going down way back on the 19th of October and has continued to move down since then. It is interesting, there is a green up candle for some movement up toward the end of the day. The first filled-in green candle we have seen in quite a while, since all the way back on the 22nd of October. That was in the afternoon. We'll see if that is going to start placing a bottom in the downward movement on gold. We shall just wait and see. The derivative oscillator continued to heat up regardless of the price movement, and we see the MACD is still diverging quite steadily. So we'll continue to watch that, but pay attention on gold. If you're in a virtual down move on gold, continue to watch gold. Now again, remember, gold, you can buy an inverse fund in gold. So if you're doing your virtual trades, and again, we're not a stock calling service, we're an education company. We don't give advice on trading. We try to teach on learning to invest. And how do you do that? You watch our videos, you listen to us every day, you get hold of our 15-minute, if you don't already have it, to get started, our 15-minute stock charting video. And then you start virtually trading. You can go to any online brokerage house. You can open up nothing but a virtual account, fund it with $1 million. You're an instant virtual millionaire. Then you can start practice trading. That's what we talk about. And in virtually any of the indexes that we chart, there's an inverse to that index, whether it's the S&P 500, the Qs, and something like QID, which is a double inverse of the NASDAQ 100, or gold. You can get an inverse fund on gold. When you see gold rotate over and go down, you can either get out of gold, hopefully you'd get out once your 2-day trend line's broken, instead of riding it all the way down to where it crosses over going down, but you can get in around there on gold, and you would have done quite well in an inverse firm because of all the loss in gold. Your inverse would have run up the opposite. It would have gone up when gold went down. That's the cool thing about the market these days. You can invest in pretty much anything. So keep that in mind as you start learning to virtually trade and invest. Thanks so much for listening to us. Please follow us on Facebook and Twitter. If you've not already signed up for our newsletter, where you get our video every day of our stock chart reviews like you're listening to or watching right now, you can go to chartingwealth.com and sign up for it. You can also get, free of charge, we will send you our video on how to read a stock chart, and we'll also be happy to send you for free from freestockcharts.com our layout. That is, it's not from them, it's from us. It's our layout that you can use on freestockcharts.com. And the operative word there is free stock charts. Thanks so much for listening here at chartingwealth.com. We're so happy to have you join us every day. And again, sign up for our newsletter. Thanks so much. Wish you the best in learning to trade and invest.